On behalf of the Cashflow Academy and also Millionaire Masterclass, I welcome each of you to why cash flow stocks, well, they are superior. And so we have limited time. We got to hop right in here. I'm going to take great care of you today. And the first thing is congratulations. Really, there's two kinds of people in the world. There's talkers that talk a lot, and you guys are here. Action takers. The people that are action takers, well, they're the ones that tend to show up. So this is what we have in common. We are here and we're ready to go. You're here, you're present, you're listening, you value financial education. So great job. 3 things for sure at the top of the prioritized agenda. First, it's my experience that I can take any ordinary investor off the street. More often than not, any ordinary investor, we're going to double their cash flow out of the gate. Boom, right there. So I have that knowledge if you want that. Now, compounding creates a wealth explosion later in life. But a lot of people need that sooner. They're getting along in life and they really want a wealth explosion to do this faster. And so I have that for people, if that's something that you want. And then third, we have this thing called click and get paid. And it's instant cash flow. You guys have come here and I know you would love to have a new income stream starting this week. So I'm going to show you how I do it and how I just, boom, instant cash flow. We call this click and get paid. And I'll tell you, it is an amazing feeling. We're going to do this. You're going to click a mouse and you're going to know instant cash flow, boom, right like that. It is a great feeling to have the power to just click the mouse and get cash flow. So that's going to be a big deal. Upfront cash, only one click away. So all 3 of these will do. Now, this is really important on the cash flow front, okay? Later on, I would say, I don't know, maybe 30, 40 minutes from now, maybe longer, maybe shorter. We'll see. I'm going to draw 3 arrows. Pay attention. I'm going to draw 3 arrows like this, and it'll represent a stock price that went up or a stock price went sideways or one that went down. We're going to make money no matter what. Now, that sounds nutty. How can I make money no matter what it does? I'm telling you, I highlight this now because when you see me draw these 3 arrows, you will know for sure that your investing life, it's about to change forever. It is that powerful. And people often say, gee, with all this good stuff, could I really set a goal to get out of the rat race? I think you should. Everyone should set a goal to get out of the rat race with these types of tools and just progress. So if we can do all this for sure at the top and out of the gate quickly, is that going to be a successful use of our time? Yes or yes? If so, great job. What are some detailed notes you should look for? Whenever I go to a meeting like this, I want to know what I'm getting out of it, right? What should I go home with? So a few things. What are we going to do? We're going to do exactly what we promised you we would do. Send out a little message to everyone. Number 1, crush the fear. All these people out there have fear. We're going to crush those investing fears for good. We already talked about supercharging the compounding. Going to do a little calculator that I use personally today. 6 numbers change your life, man. They are insane, powerful. Going to do it. Going to talk about what maximum profit is for sure. Decode numbers. We're going to look at how to find stocks, how to evaluate stocks. A lot of stuff. You're going to be working hard, okay? I know you can do it. Stay up with me as fast as you can. You can't afford to fall behind. If we can get all of this done, this and this should be a great session, yeah? Valuable, yeah? Stuff that's cool, yeah? Let's do introductions. Most of you know who I am, but for those that don't, it does make sense. I'll spend, quick, 2, 3, 4 minutes. I'll give you a little background so you can increase the confidence you feel in your teacher. First, family guy. That's me first and foremost. And, my life has been interesting. Over the past 30 years, I've taught 1 million people on this topic. My specialty, simplicity. We make it fun, make it simple, make it real, and we just become like family with our students. Why do we get close to students? Well, this is about a change in your life. And so you are family when you are with me. And no matter where in the world I go, it's the same. Birds of a feather flock together. Everybody wants to exit the rat race. And I'm just a guy who had teachers in my life. I found the value I am the beneficiary of a guy who understood the value of teachers in my life. That's it. And so I have had many mentors and teachers over the years, but I always take a few moments, just a slight moment, to respect one of my greatest teachers. In fact, not only Robert Kiyosaki, but also Kim Kiyosaki absolutely changed my life. I spent 14 years on their investing team, and the biggest thing I learned about is the value of making it simple. Now, when you look at the book Rich Dad Poor Dad, we have a choice to make. Over here we have people who have failed, desperately failed to seize the opportunity of financial education. And they run a race every day, and it is called the rat race, and they work and pay bills and work and pay bills and work and pay bills. Nothing cool going on down here. Work and pay bills, work and pay bills. And that is the rat race. There are also people who have seized this opportunity that we have today for financial education. And it's really learned about buying things. You buy things that make you rich. And so, you learn how to buy these things. And you have money coming here, and this is called passive income, okay? And when the passive income, right, you buy real estate, you buy things that make you rich. It's the art of learning how to buy real estate, buy stocks. You're getting a piece of the world's business, real estate, piece of the world's housing and land. And because you're buying these things today, well, tomorrow, forever, we get this passive income. And when it gets above the expenses, when this number is bigger than this number, well, we have independence, financial independence, and I'll get on my soapbox about that. But your choice is simple. Do we want, the work for money thing, or do we want a blueprint? Do you want a blueprint for this type of life over here? And, I know which one I've chosen. I imagine which one you'll choose. But I just a little bit more about Robert. My kids, they were learning from Robert Kiyosaki and all of his friends, and Kim Kiyosaki from really since they could walk. And he taught them financial education with his game, the cash flow game. And this made it real simple. And here's a fun anecdote, I guess. See this Ferrari right here on the board game, on the packaging? That's Robert's real Ferrari. It's the real one. And I'll tell you, you get a couple of kids, you'll get their attention when you pull them out of a desk in school and put them in the Ferrari and really learn. And I remember the lessons he taught them. He taught them lessons on this day. I took a picture of it. But we traveled, all the book signings and the food and the culture, and we just had so much fun growing up Rich Dad. Made our home movies a little weird. We would go to, like, this is in Argentina, but we go all over the world. My kids, Robert, just call them up on stage. They're 8 and 10 years old, teaching stocks, teaching real estate, teaching whatever, and just everywhere, all over the world, all kind of languages and translators and stuff like that. So it was a little unique. Now, why do I tell you this? To brag about my kids? No, not really. My kids are ordinary. They're just like anybody else. It wasn't that they descended to a great height here. That's not what it is. It's that the education is being brought down to the level where anyone can understand them, you, me, whatever age, we can understand financial education. So, we do the podcast, we do this stuff, but it is so critical. Their biggest advantage also is they're starting out young, where they have a lot of years they can do this for. Well, if you don't have a lot of years, get going. It's a huge thing. I will say start small. I remember my first investment. It is really easy to start. $160, 10 shares, $16 a share. It was called the Panera Bread Company back before they went huge, the first time they went public. And I really I was investing that first $160 or so to learn. And that's an easy thing to do, because it's small, right? There's no risk in that per se. So start small, and everything I will share with you, you can start small with, and then we'll grow from there. So anyway, that's how they started. That's how you'll start. We all start small. We let compounding do it, talk about it. And I'll just get on my soapbox a little bit here. The reason you guys do this is for your lifestyle and your families, right? That's a big reason to do this for your future, whatever yours is. Now my kids are almost grown, and I get on my soapbox a little bit here, and I'll just give people a warning. And this is good counsel. Be careful who you hang out with, because there's people out there. I get canceled, man. I get in trouble when all these people out there. I should do a trigger warning for these people that need the trigger warnings. Look, I tell my sons pretty hard lessons, and I'm introducing myself, so you just well know where I come from, and I'll chase some people away on purpose because I just can't stand having to give freaking trigger warnings to everybody. So I'm just going to tell you how I lay it out. Same thing I tell my sons. I said, sons, look, pull your own weight around here. There ain't no free lunch. There's not this entitlement, something for nothing. You freaking pull your own weight. You stand on your own 2 feet. Ask not what the country can do for you. Ask what you can go do. Don't be getting a handout from the country. Help the country. Don't ask for help, and get going and be self-sufficient, because that's what getting out of the rat race represents, is freedom and power and happiness and health and wealth. And it's worth moving and getting going. So that kind of tells you where I'm at, if you know what I mean. It gets me canceled in some circles, but I know the power of independence, and I know the power of what a human being can do, and I will not diminish it by saying, oh, you got to be freaking spoon-fed. Now, it was Kim Kiyosaki that did this. I don't have a lot of talent, so when I get a compliment, I remember it every day, right? I'm in Las Vegas, and I was teaching a little bit with Kim in the early days. She says, Andy, she gave me a great compliment. She says, you have a gift of simplicity to make cash flow simple for anyone. Start an academy, teach people around the world. That's your calling. And I took that serious. Now, in my heart of hearts, I would acknowledge gratefully and humbly that, yeah, I had people tell me that I can make stuff simple, but it was really Kim that took that little spark of talent, if you want to call it that, or what it is, and she fanned it and grew. And my gosh, look at this, 108 countries. Actually, this is an old slide. We're now at like 170 countries, thousands of people, way past 8,000 trades, I'd imagine by now. But my specialty is this. If you want to have a lot of fun learning financial education, and you want someone that can make this simple for you, and you want real cash, no fluff, in fact, I can give that to you. Let's talk about the real, and people always want to gloss over this, and I won't. Oh, Andy, get to the cash flow. Oh, I'm a big boy. I know there's risk in investing. I've seen legal stuff before. That's not the point. The point is that you and I are going to walk towards your goals. We're going to walk towards your goals together. And if I take you by the hand and you show me you're willing, and I decide to take you by my hand, we're going to walk into this with our eyes wide open, and we will not be afraid to talk about how we manage risks, and that risks are present. And so, I'm an educator. I should put a marker on this. I'm an educator. I do not give advice. That's not what I do. I'm happy to teach from examples. I'm happy to illustrate this stuff. But we will know that there's risk involved in real estate, stocks, business, crypto, whatever you do, trading, investing, whatever your gig is. We're going to learn to manage risk. Now, with that said, I'm going to expand on this. I'm going to get a little irritated, and then we can start learning. But it's important to lay context. And if a person doesn't have the patience for a pre-flight checklist before you get in the air, well, they don't belong in my plane. Safety first, risk management first. And I get so mad that whenever I get a public forum, I take a 30-second liberty to poke these guys in the eye and pop them in the nose, figuratively. Look at these messages that are preying on people in our country online with total crap, acting like they know what they're doing. These so-called teachers, we made $40,000 in 3 weeks without doing work. No, that doesn't happen. That's not possible. It's a lie. Someone says, 87 weeks, we picked only winners. Baloney. I've been doing this 30 years. Never had an 87-week run. Never known anyone legitimate that's done that. Not even Buffett. Tons of money. We don't have to take these messages of all good and no bad. Everything's wonderful and there's no risk and it's falling off a log. No, there's work involved. Dang it, there's work. I have 2 sons. You don't have to work hard. You got to work smart. Look, compounding is what I teach my students. It is proven. It is a principle, and it takes a little time. Doesn't happen in 3 weeks, though. My gosh. My sons have already have their own accounts for, one of them for 3 years now, runs it by himself. already find that, hey, when he has a loss, it's limited because of what I've taught him, right? He follows the rules, has losses, but they're limited. You don't have to win 87 weeks in a row if you can limit losses. And then here's the commitment, and this is the first cut that I can make from the team. If a person thinks they're just going to waltz out there without any practice to get good at sports or piano or investing, they got another thing coming. Okay, this is PM, paper money is what it stands for. This is a simulation, not a real trade. This is a simulated account. And in our clubs, we started at 100,000, we grow it to about 1 million, then we start over to 100,000, we grow it to 1 million. We do it over and over and over, and we practice, okay? We practice in a risk-free account. I will not teach people that will not follow risk-free account and watch it done here first. And it's a total simulation. I mean, it's real stocks, real stuff. So who would have an interest in, if I decide to take you by the hand and mentor you in this, who would have an interest in doing this in a simulated first before you fly in the air solo, just like a flight simulator? So talk more about how that works, set that up easy, and then we're going. Finally, if you communicate with me, it's like enthusiasm, right? To get the most out of this, you can tell I bring it, man, every day. I'm a high energy dude, right? And so you bring it every day. No one won Investor of the Year by saying the secret to my success was apathy. No. I tell my kids, you don't win the state championship with apathy. Ralph Wall, my college coach, Rick Majerus, he's center court first day quoted Ralph Waldo Emerson, nothing great happens without enthusiasm. And that's true with investing, true in your life. So there's your choice. There are people that want a paycheck and people that want a plan. And if someone comes to me and they have a paycheck mentality, they should go chase a paycheck. And people that want a plan. This was the choice I made with Rich Dad Poor Dad. It is not uncommon to have people that want a paycheck. Not uncommon. They chase them all the time, get in the rat race. That's what they want. They want a paycheck. I am more impressed when I see someone who's sincere, honest, enthusiastic, stoked, fire emojis in their life and exclamation marks and capital letters and everything else when they say, I want a plan. So which do you want? You want to chase that paycheck, or would you rather not have a paycheck and trade that life out for a plan, a blueprint for cash flow? We'll talk more about that. Now, with that long introduction, but an important context that was said about risk, about enthusiasm, about the things that really matter, why are cash flow stocks superior? You get to pick one. You have your financial statement. You're going to buy an asset. You want to buy an egg or a goose that lays golden eggs. It takes about 10 seconds to understand this is superior. Why? Because it produces constant cash flow. You see, a child understands it. 7-year-old understands it. 8-year-old understands it. 3rd grader understands it. CNBC doesn't. It's unbelievable how, Buffett always says, I'll tell everyone how my secrets work because no one ever follows me. Why? Because they look at CNBC where they worry about price instead of production, instead of producing. You see, this is a producer of cash. This is not. And so, I want to sell when it gets high. And maybe I'll learn to buy. And you're going to try and guess that buy low, sell high crap. You can try that. Some people are good at it. But I'll tell you this. We buy a goose. We as of now, breathe in and just let go of any price. Just take the price away. Like, who's going to say, oh, yeah, man, I'll buy this goose. And maybe next week the price goes up and I'll sell the goose. Why would you want to sell something that is producing the very thing you want already? So you take this goose, like this, and you put it in the asset column, and guess what you do with these eggs? You buy another goose, and then this will happen twice as fast. This next goose will happen 3 times as fast, and the next goose, they'll come out, and next thing you got goose over here, and then you got it over here and over here, and who cares what the price is, and if the price moves or goes up or goes down. Look, we're going to learn about how price won't matter to us. It will be totally irrelevant. We will not care about it. There'll be no worry. It'll be absolutely irrelevant. Price means nothing. The rate of the return we get is everything. In other words, how fast, let's get rid of some of this flock of geese over here. The question isn't what it costs. Now listen very carefully. The question is the rate of return. How fast will it pay for itself? In other words, if I spend one golden egg and it lays 3, I got my money back pretty fast. And after that, it doesn't matter what the price is because I have my money back. So the rate of return of when this pays for itself is the issue. We do not need to worry about price. And that is the first reason, my good friends, is that it's so simple. It's the first reason cash flow stocks, which is superior? Something that tries to change in price like a Bitcoin, or something that will compound faster than that could ever rise. The compounding effect you'll see it. You'll see it. Now let's change this and go a little deeper. This is called the cash flow jack in the box. What's it called? It's called the cash flow jack in the box. That's what it is. Okay. So a cash flow jack in the box, we're just going to divide this right here. And these people are called traders, and they're on CNBC. And, they have emotional problems, and they have things like panic, and they worry about price. Okay. They really do. They worry about it. I don't. What we think about is value, because that's what you really get. Price is just what you pay, and only pay it one time. Value is forever. Price is one time. Okay. This is forever. I get to keep this perpetually forever. And what we're going to do is we're going to look at 3 parts of this little machine. I call this a cash flow jack in the box. 3 parts to it. First, you have the work that's done. There is a lot of safety and risk management in knowing the work that's done. Look, I said I was going to take away some of the fears of investing. Okay. If you invest over here, it's all about fear. It's all it is, because you're afraid prices will go down. What is the one single reason that people are, I'm so afraid to buy a stock? Because I'm afraid that it will go down. How dumb are they? How dumb are they? I never worry about it. And here's why. If I know the work that is done, okay, let's build confidence. Would you like your confidence to be built? I make this so simple. Look, go to Costco Saturday. Hey, pick any Saturday that you want. Pick any Saturday you've ever been, or anyone in the future you want to go to. I can predict the future easy. It's not hard to predict the future. Now, I don't know where the price of Costco stock's going to go, but I know which way the cash flow. And that's why we are the Cash Flow Academy. You can bet that you go there and you will see the cash flowing one direction, into the cash register. It will go from the pocket, and they'll line up to do it. They'll park as far as way, there's full parking lot, and everyone in the parking lot has a wallet, and they all walk into the store, and then they take the money and they give it to the store, and then they leave with stuff, right? They leave with stuff. And it is the producers that get the money. The people that have these boxes that produce things, that do work, get the money. The guy who makes the Heinz ketchup, you send some money to him. The Costco makes the little pizza and the $5 chicken, you send the money to them. The quality of the work that's done. Look, Coca-Cola, for example, the Buffett talks about this. Coca-Cola. Yeah, try to kill that. Look, I don't know where the hell the price is going to go. I don't care, because I'm thinking big. 1886, this guy put some cocaine in a drink, and everyone loved it, and then he had to pull the Coke out, but he kept the name. 1886, not even the Coke could kill it. Okay, World War I, still selling Coke. Coke and a smile. Pretty bad times. Mustard gas, chemical warfare. World War I, all people buying a Coke. Oh, okay. World War II, people buying a Coke. Oh, turbulence of the 60s, assassinations. Martin Luther King is killed. Kennedy's killed, right? Total chaos. Everyone's taking acid and they're washing it down with a Coca-Cola. And they're selling more and more. Can't kill it. Oh, 70s, inflation. Oh, we got Iran problems. We got oil problems. Inflation. Oh, now we're spending too much for the Coca-Cola. Inflation. Jimmy Carter years. Yeah. Coke and a smile. Yuppie 80s, crazy 90s, 9/11 in 2000s, subprime meltdown, global pandemic, anything you want, you can't kill it. And now, after all that crap, they sell 2 billion beverages a day. A day! You think you're going to worry about buying something like that? And a guy pulls up in a Ferrari and comes out, and they go, what does he do? He owns Costco. Oh, a guy pulls up in a Lambo. What does he do? Oh, he owns Apple. These are good companies. If you have the confidence to buy, then have the confidence to sell those products. If you have the confidence to pay for an iPhone, then you should have the same confidence that other people would buy from you if you own the company. It is a cash flow deal. So the quality of work that's done ensures it. I mean, people under the underpass with no home have an iPhone. If they do good work, there's safety in that, and you can last for a long, long time, a lot of years. Okay, second is earnings. Not capital gain, not prices going up or down, capital loss, they earn the money. Oh, work earns the money. And this is what we call the lowest way to participate in American business. Listen to the words coming out of my mouth. This is what Buffett calls, remember this is going to come up again. Here's a quiz. There's going to be a quiz. What level of participation in American business are you going to go into? Lowest level, which means stock ownership, means you buy stuff. That's it. The buyers win. The panickers lose. People who panic lose. People who are worried about risk, price going down, lose. Buy it. Just buy the stock. Buy it. Now look, if the company does good work, it's going to be fine. Price will go up and down, but the earnings is where the golden goose is at. This is the freaking eggs coming out of the goose's bum, dude. It's laying eggs, right? They're cranking them out. Earnings, and I also want to know if they're growing. So basically, you got value. And how do you see value in a stock? Well, number one, it does good work. That's the first thing I want to know. It's not that freaking hard. You think it's hard to own Dairy Queen? Everyone goes there for Blizzard. You think it's hard to own Geico? Everyone buys their insurance there. You think it's hard to own Costco? All the money goes one direction. It's never going to change. Every Saturday, you can either be the guy paying that money or taking it if you want to own some Costco. You have that money come, and they will divide, right? These are called dividends. They'll divide the money between you and Warren here, or me and Warren. They'll divide that so we earn money. And that's cash flow. Who cares where the price of the house goes if we're collecting rent and then we want growth? And value is those three things. We want a company that does great work, one that's earning, and one that's growing. It's not that freaking hard. If you have those things, you're going to make money. If they do good work and they earn lots of money and they're growing, you're going to make money. Okay. Don't complicate this. Okay. Why have fear? Because if I buy the stock, the price might go down. Who cares if it paid for itself? If this pays for itself, who cares? How many of you would like to buy something and for whatever it is? Okay. Costco's like $1,000, let's buy 2 shares then, whatever, right? And you drop a couple grand on price, but it gets back in the earnings. So $2K here, $2K here. Okay, great. I don't need the price to go up. It's called rate of return. Rate, that's the most important thing, of return. That I care about a freaking lot. In fact, this is not optional. I got to know how fast this gives me my money back, because I don't want to depend on the price going up or have to worry about it going down. Look, if I pay $25 for this, I want to know how long it is before I get my $25 back. Maybe we should go back to the simple goose here. Look, if the goose is $100 goose, okay, and each of these eggs right here, right? If each of these eggs is $50, right? When they come out, how many? Well, that's 2 eggs. Okay. How much time does it take for it to lay 2 eggs? And then, see, this 50 plus 50 is $100. Now this is gone, and all the other eggs, this 50 and this 50, it's all profit from there on, because I've got my money back, which means I can't write this fast. I have no risk. How many think I'm spelling this out pretty freaking simple? It's just the rate of return. Okay, let's say this is $1,000. Okay, great. How long is it going to take me to get $1,000 of eggs? Once I do, they're canceled out. Fine. What if it's $2,000? How long is it going to take me to get $2,000? Oh, let's say it's $100. It doesn't matter. Price, it just doesn't matter. It's the rate in which it pays for itself. How soon will this thing pay for itself? Why people worry about stocks? Well, the price might go down. It's going to pay you here. How many understand that? Okay, so that is the first of many reasons that cash flowing stocks are superior. They just are. Now, let's do an example. How to buy a railroad. The first thing we got to do is say, what kind of work does this railroad do? Okay, is it something we'd like to do? How do you live without a railroad? This is the biggest one, BNSF, right? Burlington Northern Santa Fe. It's the biggest railroad. It is. It's the biggest one. It's the nation's largest grain hauling railroad and everything else. 23 million. Now, this is back in 2008 when he was looking at this. And that's going to be huge because we're going to do an example when he bought this in 2008. Okay, check this out. 40% of the nation's freight from shore to shore. Okay, so do you want to be in the railroad business when 40% of everything we eat and build and wear goes on a railroad? Is that pretty dang safe? Oh, we're going to not have railroads anymore? See, there's safety in the work that's done. Everyone's so worried about the damn price. It helps with the air quality and all this for all the tree people. Okay, 1 million carloads of agricultural commodities. That's not all. How much work do they do? 8 million tons of lumber. I'd love to get paid on that work, and I'd love not to haul it myself. I'd love to participate in the lowest way, which means owning the stock and not showing up for work. I'm not going to show up for work as an employee. That'd be the heaviest way to participate, is actually moving this. If I own the company, it's the lowest way to participate, right? Smallest way. 14 million tons of steel, 13 million tons of... Do you know how much? That's a ton of stuff. In fact, it's more than a ton of stuff. That's 1 million tons of... No, it's millions of tons of stuff. They're doing a lot of work. It would cost, you know what it would cost? He still owns this, came out his letter, cost almost $500 billion to rebuild all these railroads, all this stuff. It's valuable. Quit worrying about the price going down. We need all this work done. I'm going to make a prediction. They're going to be around next year and the next year and the next year and the next year and the next year. That's my prediction. I don't know where the price will go. I don't care because they just want to know how fast I can get my money back. Bonk. It's that simple. Now, so, over here, you got Fear Boy over here who loses his freaking mind. And what did he do? Maybe he bought the stock at 80 or whatever, right? And he's worried about what? He's worried it's going to go down. That's their life, these guys who trade. They have no concept of the work that is being done. No concept of it. They don't get it. They're worried about the price instead of about the work that the thing does. I'd rather have the lowest way to participate in American business. Now, I'm going to give you something called a fundamental analysis. Write that down. We're going to make this simple. What's my talent? Making it simple. So what does fundamentals mean? Well, it's Magic Johnson, dribble, pass, and shoot. It's Larry Bird, dribble, pass, and shoot. I would use, an NBA guy today, but none of them are fundamentally sound. I don't know, Jokic is, right? You got the fundamentals, right? Basic stuff like a marriage. There's just be nice, be kind. How about that? Be forgiving if someone says something wrong, right? It's just the fundamentals. Love in marriage, fundamental. Be kind, fundamental, makes it work. So in business, there's just some things that should be there. So when we look at this work, right, we say, okay, what kind of work do they do? There's just some fundamental stuff that needs to be done. Fair enough? Fundamentals. Now, analyze means we're going to look at it carefully. That's it. We're going to look at some important stuff carefully, and it's not that hard. Buffett will tell you it's temperament. He'll tell you it's temperament. It's whether or not you're going to lose your freaking mind like this guy or just be cool with it. It's temperament. It's all it is. It's temperament. So what is a fundamental analysis? Well, there are fundamentals to being healthy. And here's 6 numbers right here, 6 numbers. Blood pressure, blood sugar, cholesterol, hit your knee with the, hammer thing, body mass index. That's the one my doctor, I walk in and they do my body mass index and the doctor looks at me and says, "Are you serious? Andy, are you freaking serious? Really, Mr. Diabetes waiting to happen?" Because there's just fundamental stuff, EKGs, that are supposed to run right. And this takes away risk. Because if you take everyone on this, everyone attending the master class, the millionaire master class, and we send in those 6 numbers to the doctor, they can tell which one will probably win the marathon and which one is going to have the heart attack. It lowers risk. I mean, it's like a bank. A bank will say, what's your income? What's your expenses? What's your liabilities? What's your asset? What's your cash flow? 6 numbers. 6. And you can't fake these. Right? Look, if you have a bigger income than the other company, you're better than the other company. If you have more assets and more cash flow and you're growing, you're better than the other company. So all you got to do is apples to apples. You can do it with a person. You can do it with a nation. You can do it with a nonprofit. You can take all the schools and you can tell which one's strongest by looking at those 6 numbers. I could take everyone on this, everyone on this class, and I could line you up next to each other. I know who I'd do business with. And I know who would be really risky to do. Real risk assessment. Simple. It's called a fundamental analysis. And so Buffett does it. He says, look, are they growing? is it, he's looking at this, and this is historical, 04, 05, 06. Their revenue's going, well, they're making more money every year. Oh, their assets growing. They're getting more assets every year. It's not that tough, and I can show you how to do it. Now, one thing he does, he says, okay, how fast would I get my money back? And he has a rate of return he demands. He says, you know what, if I pay 102 a share, I'll get that money back quick. If I pay 500 a share, it'll take me too long. But 102 a share, I'll get my money back quick, and I don't worry about the price. So I'm going to buy at 102. Now, you want a mentor, right? Do you want a mentor? One of the things I said, why have I been blessed? Because I'm brilliant? No. But I've hung out with some pretty good mentors, right? I've hung out with pretty good, where's my picture? Mentors, right? So Buffett is no different. Look, okay, here's a little secret. The cover of the book's called Rich Dad, Poor Dad. You think this book is about assets or about a man who helped another man learn? This book is about mentorship. Don't you understand? You think it's about assets and liabilities. It's about a guy who found a guy who taught him how to do it. So I'm a guy who found a guy who taught me how to do it. Benjamin Graham is a guy who found a guy to tell him how to do it. Value is earnings, right? Earnings. And this G stands for growth, right? Benjamin Graham formula. Buffett doesn't use that formula, but he uses it as an example. But it's the same thing, earnings and growth. Are we earning money or are we growing? Yeah, we are. Now, meanwhile, Fear Boy over here bought this at like 80. And he's looking at the charts trend. He says every time it bounces on this line, it's going, oh my gosh, it fell below the line. Now it's hitting its head on the ceiling. The support has now become resistance. And he's afraid that that's when they start to turn, which often can be the case, but not always. So he starts to panic. Why? Because he's a fund manager and he has 2 million shares of it. That's why he's panicking. He says, oh my gosh, every time I lose, this goes down $1, I lose $2 million or I use $2 million because if it goes down $1, I've got 2 million shares. So it goes down $10, I'm going to lose, $20 million. You see that? He's freaking out. He's losing his mind. Poor guy. Be greedy when people are fearful. You know what? I hope it goes down because that means it goes on sale, but I really don't care if it's been paid for. If the golden goose is paid for and it's cranking eggs and the money you put in, you've already got out, it's like getting it for free. Look, if you get a golden goose and you get it from your uncle and he says, 5 years from now, I'm going to give you my golden goose if I pass away. It's in the will, 5 years from now. Okay, 5 years later, you get the goose, costs you nothing, no risk. Now you have a goose the rest of your life. You don't have to worry about the stock going in. What's the difference if you buy the goose now and it pays for itself in 5 years? It's the same. 5 years, free gift from your uncle, 5 year, or get it now and it pays for itself in 5 years. Same thing. Same freaking thing. It's going to pay for, maybe I'm wrong. Well, then maybe it takes 6 years. Okay, that's your risk. It takes longer. But if it's a good, solid company that does work, Burlington's not going anywhere. It's just not. So this guy is freaked out. Warren Buffett said it. When people are fearful, be greedy. Buy when other people sell. It's that simple. When would be the best time to buy it? When it's at the lowest prices. In fact, this is when you should have buy it. And every time it's going where? When you should have bought it. Every time it's going down when you should have bought it. See? So it's just temperament more than intelligence. So I'm going to give you an options lesson. You don't need to really learn it right now because if I pick you, then great, we can learn it. If I don't pick you, you have to learn it somewhere else. He's thinking 102. He says, I'll pay 102 for it. And this guy's scared to go below 75, right? So we have a stock chart and we see that stock chart. And this is what's interesting. He says, I want some insurance. Now, this is going to be really important later on. He wants a contract. Okay. No, you know what he wants? He wants a guarantee. How do you spell guarantee? Guan. No, I don't know how to spell guarantee. How in the hell do you spell guarantee? I got to figure that out if I'm going to teach this stuff. I got to know how to. Someone help me out and tell me how to spell guarantee. Let's see. I got to hang on. Let me start over. Okay, I can do it if I start over. Guar, right? Someone help me. Guara, what? N-T, 2 E's? I don't know. Guarantee. How do you spell it? He wants a contract. That's easier to spell. Okay. No problem. He wants contract. He says, look, I want the choice, another word for option, to be able to sell this. So let's say the stock is at 85 and it goes to 75 like this, okay? This is his guaranteed, G-U-A-R. How do you spell guarantee? Guarantee. This is his guaranteed sell price. And so even if it goes down here, someone's going to pay it, and he says, oh, I want mine to be 75. So that's his price. Guaranteed sell price is 75. Buffett says, are you freaking kidding me? I was almost ready to spend 102. If I can get it for 75, you got a deal. Now here's what's beautiful. Cash flow. Click and get paid, baby. Cash flow. He's going to have to send him what's called a premium, like insurance, an insurance premium. If he's going to guarantee this, and he's going to have this choice to sell, he's got to pay $6.35 for it, is what they say they do. That's $6 to Buffett right there. Bang. That actually takes his cost basis from 75 to under 70. But anyway, who's doing math here? I can't spell or do math, and I just know to buy the asset. Now look, this is what it looks like on paper. Now this is called a financial statement. And I'm gonna have you notice a very important word right here. This is another reason why cash flow is superior. That's the purpose of this class. Why is cash flow superior? Well, okay, this is you, okay, and this is Wall Street guy, broker guy over here, Wall Street trader guy over here, and the money is flowing from him to you. That's a good thing. Okay, bad thing for him maybe, depending, but good for you. Okay. The cash is flowing. One of the things I take people and show them how simple it is to look at you and look at them and draw which way the cash flows. Their expenses, your income, that's good. Now, this is really cool because you're going to do this. Okay. I said you're going to practice. What did I say? I said you're going to practice this in a risk-free account. Okay. This is cash. Why does he have $75 in there? Because he promised to buy it $75. So if you're Geico and you insure a car for, $10,000 or whatever, you better have $10,000. If you're State Farm and you insure a home for $500,000, you better have $500,000 in the bank. So if you promise to buy a stock for $75, you better have $75 in the bank. So he's got $75 in the bank. He receives $6.35 for a promise. That's it. It's called cash flow. So you divide that by that 75, your rate of return is 8%. Okay, 8.3% or whatever it is, 8%. Did I get that right? $6.35 divided by $75 is, about 8%. I got 8.3, it's 8.4, okay? And I'm going to show you why it's 8.4, because this is just a little bit over 2 months annualized. Right? It's 50% annualized. He's doing this just over 2 months. So he can do this 6 times a year. So that's 50% on his money. Stop it. Game over. What, you want to put your money in a 401k now? You want to put your $75 in a bank? Or do you want to put it in an account that says, look, I got $75 here. Pay me 50% per annum to buy stuff cheap. Are you kidding me? This is why cash flow is superior. Okay, and we haven't even bought the stock yet. We're already making money on the cash before we buy the stock. Click and get paid. Now, this is cash flow. So $6.35 by 75, 8.5% return for 2 months. That's 50% annualized, 2-month contract, 2-month promise. Buffett made a promise that says, look, over the next 2 months, I'll buy 2 million shares of your stock and I'll pay $75 for it. Why am I willing to do that? Well, I valued it. I was willing to pay 102 anyway, but since you're freaking panicking and you're worried, I'll buy it cheaper. I got no problem with that. The whole deal here is understanding 2 things. You got to know the value. You're going to focus on value from now on. The price thing is out of our purview. We're blind to it, man. I just want to know the value. And what is the value? The work that it does, the cash flow it makes, the rate that it grows, and how fast do I get my freaking money back? Because if I can get this, look at this, he's paying 75. He's already got 635 of it back immediately. Now his cost basis, now his risk is, 78, whatever it is, 65, right? You see this? It's all about how fast the money comes back. He doesn't care about the price. He would have paid this, but if you can get this and then get this, see how he's getting it cheap? So earlier I said this, is that I was going to draw something. Now watch, 85 bucks. Now earlier I said we could have a stock go up, a stock go sideways, a stock go down. And Buffett's making 14 large on this, 14 mil. And so think about this for a minute. If the stock goes up to 90, then he keeps the $14.7 million. And he's very, very happy. Why? Well, the guy isn't going to, if he says 75 is where he'll sell, if it's at 90, he's not going to exercise that option. Now, Buffett will still buy it at 75 if it's up here. He will. He's promised to, but the guy's not going to take him up on it. Okay, let's say it goes sideways, 14.7 mil, bang, in the bank. Let's say it goes down, it goes down to 90 or 80, 14.7 mil. But let's say it goes down here below 75. He's still going to get the 14.7 mil. Plus he gets what? He gets 2 million shares that will now start producing income to finish paying off the stock. Now, people lose their mind. They go, what if it goes to 70? What if it goes to 60? Who cares? At this point, we know that if we pay 75 for it, we're going to start getting this money back. In fact, we've already got 6 of it back. So now we only have to get 69 or 68, 65 back, right? And we know how much time it will take for this to produce income from railroading, and that is happy, and Buffett's fine with it. So price doesn't even matter. Now, earlier I said that I was going to draw 3 arrows, and the price could go up or down and sideways. And when you saw this, you'd absolutely know that your financial life is about to change. How many are having that feeling right now? So it's a beautiful thing for you to do. Just buy stocks, buy it. There's billions of dollars out there doing this. This is the year before he bought the railroad. By the way, he did Coke later. He's done this all the time. He does it all the time. I do it every single month. I do this. Look at the language though. That's my talent, is making it simple. I mean, if you read this year, Berkshire Hathaway, Omaha, Nebraska, a holding company headed by Mr. Buffett, collected premiums of $2.5 billion from sharing insurance on stock indexes, bonds, the form of derivative contracts which guarantee payment to the buyer in the event of specific law, blah, blah, blah. Look, pick the words out. Premiums. Remember, that's what it's called. He paid a premium of $6 to Buffett. Buffett collected $6 in premium. He did a lot, though, $2.5 billion worth. Insurance contracts that guarantee. It's insurance, it's a contract, it's a guarantee. You can use these smart. You can be smart. This is what professionals do. But amateurs don't know it because they spend all the time here. And I'm going to have a little heart-to-heart with you on this, because you have family members I know like me. How many of you have family members that you love, and you go to Thanksgiving dinner, and even though you love them, about 2 hours in, you've had enough? You know what I mean? You've had enough. And then, one of them comes up, and says, hey man, I understand you know about investing. Would you help me out? And I said, sure. And then I say, hey, do this. He goes, whoa, 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 whoa. And they start arguing, and they start naysaying. They say, look, I'm the one that's taught this around the world for 30 years. I'm the one that has cash flow coming in my account every freaking single month. I'm also the guy that can teach kids to do it, but I can't teach you, Uncle Elmo, because you freaking won't listen. And the quality of my life is the quality of my students. So done. Let me just love them. Don't disown them, but hang out with people that can make you successful. How many of you feel that it's possible that if you hung out with people that were successful, you'd have a chance to be successful? If you hung out with people who knew how to invest, knew how to do things, you could be this. But you got to be nice to them, because the quality of their life is the quality of the student when you're a teacher like this. Now, when you work for money, that's not as good as having money work for you. And learning job skills is not as good as learning investor skills, but I'll let you decide which one you want. Do you want a paycheck or plan? Do you want to chase this, or do you want a plan? A paycheck, I've never understood how this is so simple. A paycheck is linear. It goes like this. Every week, more money. There's your exponential graph. I mean, it's so simple. This choice, this versus this, this is choice. How many would love to click a mouse and get paid? How many love that today? Click. That would be a good feeling, wouldn't it? Just kind of imagine that. Click, how good that would feel, and then you get paid. That's a nice feeling. Click, get paid. You just buy. You can buy stocks. Just buy stuff. Look, see this asset right here? Buy stuff that's going to pay you. and participate in business at the lowest level, which is ownership. Okay. Now, here's a fun story of my kids, and I won't take too long on this, but it does illustrate a point. You can do this at the $1 billion level, and you can do it at the $100 level if you're in the 8th grade. To Buffett, $2 billion probably doesn't get him excited anymore. But I'll tell you, a Hyundai, a C note for a kid in 8th grade, not bad. So here's the story. COVID hits back in 2020, and we're coming into September. I said, son, you're going to be 6'8" someday. I know you don't look like it now, but you're going to be bigger than your dad. And that actually did happen. But back in 2020, he wasn't that big 5 years ago. Now he's 6'9", right? 6'9 and a half, right? He's a big kid now. Here, not a big kid. But then we say, hey, let's learn to do this. And so we took a year of financial education home. We didn't do physics. We didn't do chemistry. I says, I'm pulling him out of school, called a gap year, so he can grow big and play hoop. But in that time, we're not going to waste it. We're going to learn financial education. And so he got paid $155 to buy a bunch of shares of stock at 32 that he liked. And 2 years later, my other son, he turned, the same age. He graduated from the 8th grade. He says, I want a gap year. I says, there's no more COVID. He says, I don't care. I want a gap year. I want to be 6'6". I says, all right. So $109, bam. So those C notes come by click and get paid. So that's what you imagine, how good it feels to just click. It's awesome. And that's why they're smiling, right? It's fun stuff. Now, I said that cash flow stocks are superior. That was the thesis statement. And so, I'm not going to defend that statement. If people don't believe me, they don't have to. But I will tell you that another reason cash flow is nice is we don't have to worry about the dang price. And cash flow must not be interrupted by these silly price changes that require the sale of an asset. Right. This is one of the homes. I get this on Zillow, and I have some real estate. I don't have I got a friend with $2.2 billion under management, got 8,000 doors. I don't have 8,000 doors, but I got a lot. So anyway, this one I just picked, and here it went up, and here it went down, and here it went up, and here it went down, and here it went down, and here it went up, and it goes up all over the place. So I'm not going to lose my mind when it drops, $40,000 or when it goes up $70,000. Who cares? I just want the cash flow and the consistency of the rent because I'm never selling this. I want a cash flow. So again, I don't care about the price. I care about the work that it does. Is it a nice home that can put a family in 4 walls? Yeah. Is it growing? Yeah, because of inflation, right? The prices, the value is growing, right? The rents are going up. We're having growth. We have earnings. We have good work. We have good earnings. We have good growth. Valuable home, consistent rent. Off you go. It's not that tough. Why are people not buying homes? Because I'm scared the price of housing will go down. Well, learn financial education then, right? Okay. This is home price history. Right? This is stock price history. It's the same thing. Stock prices all over the place. See this? 70, 70, 70, 70, 70, 70, 70, 70. See how consistent that is? So another reason cash flow is better is it's consistent. 70, 70, 70. You're going to have a lot more consistency getting this dividend. These are the profits of the business. And today, this is an old slide. Today, Dow, I bought it down in COVID here. It's almost that cheap again. It's like right here, right now. Somewhere in there, like $39 or something. I mean, I bought this around COVID. I bought mine at like 43, like right around here is where I bought. I bought on April 26th, about 43. So it's cheaper than it is now. And I've had it as high as 70 twice. And it might go as low as 25 again. I don't care. Why? 70, 70, 70, 70, 70, 70. And I'm compounding. Look at this. I'm going to show you 2 things. This is called the dividend. This was 100% since I've owned it. I bought it in COVID. I showed you on the graph. I bought it right around here. Okay, coming out of COVID. I bought it right around there. And right now it's down probably around here. Who cares? Do you care about the price? I don't, because the asset's paid for. Watch. Every one of these 70, 70, 70s is a dividend. So I own the company at the lowest level you can participate in. And when they make money, they share some of it and they divide it up with all the shareholders. So 70, 70, 70. Now I said I could double what most people get. So most people could buy that and get the dividend. Okay, but how do we double it or triple it? Well, see all these little green ones right here? The power of a few pennies is powerful. There's an old saying that says, if you take a penny and, this guy went to the king and he told the king, I'll take a little pence for the work that I do, shoeing your horses. But every day you just double the penny. Like, so for today I get a penny, tomorrow I get 2, tomorrow I get 4, and next day I get 8. He's like, that's just pennies. You're hired. Well, if you compound that, you're going to wind up, he owns the castle in a month. He owns the castle in a month. Have you ever seen that? pennies compounded, doubled every month. So I just take these little pennies and I use that principle of compounding. See, you don't need to do nutty things. Okay. You don't have to be like Gomer here who freaking believes all this crap. You don't need that. You just compound. You take your little pennies like I'm teaching my sons. That's how he started. He'll tell you the same thing. And you can't believe how it explodes. You cannot believe it just explodes like crazy. So about 89% of the time, I just let it go. Now, sometimes it goes up high and I buy it back because I want to keep the stock, right? It goes too high. So I buy them back. So, there's some, like I said, I've never gone 87 weeks in a row, but I've gone a lot of weeks in a row right here, a lot of weeks. It's not 87. So if you take this stacking income, price doesn't mean anything now. Why? Because of the rate of return. The rate of return is so fast that it's going to pay for, this goose will pay for itself free and clear. And people see that golden goose analogy. And I had one guy, I wanted to throw him out of the class. I didn't. I was nice, but I'm not going to let him in any of my other classes. And he goes, like this was a few months ago, he goes, "Oh, golden goose, where do you see golden goose?" I'll show you what golden goose looks like. They look like this. It does work and it spits out golden eggs, right? It looks like this. It does work and it spits out golden eggs. It looks like this. It does work and spits out golden eggs. So I buy this for $43.81, and I've had returned, $43.91. I had the whole thing returned back to me in 10 cents extra in 4.5 years. That's fast. Now I have that, not just my life. I mean, now I have this for, what have I got in me? Got another 30, 40 in me. Got another 40 years in me. And then my kids, I'll bequeath this to them. My grandkids will get it. It'll go forever. It'll be around in 30, 40, 50, 60, 70 years. It's that strong of a company. So I got 100% of the money back. What do I care what it costs now? So I can look at this today and say, someone says, "Oh, it's down here." Well, it's been down here before and it's been up here before. Who the hell cares? The price doesn't even mean anything to you today. What means a lot to you today is that you get 100% of your money back fast. Rate of return is everything. What you get is so more important than what you ever paid one time. So the return, 100% of the money, annualized, that's 20%. That's pretty cool. Conservative, you can do this in the IRA. This is covered call writing, basic stuff. I have some advanced stuff I do in here for sure, but the basic principle is pretty simple. So we have opportunities for the cash flow and the dividend, the premium, put option premium. I'm not going to go through all this, but there's a problem that stops you. And the only thing, it's not inflation. It's not the government printing money. It's not the war in, wherever. When we got war in Ukraine, you got war in Israel, lingering pandemic stuff, still 5 years later bothering us. Do you know that the problem is that people just don't know how to invest? Do you understand that's just it? Is it just people are over here? They learn job skills. They don't know how to invest. That's the issue. And it costs $1 million. Being stupid costs people millions of dollars. 80% of youth can't do basic financial literacy, which is a complete crime because youth can learn this. That's a crime. 4% feel secure. That's a crime. We should feel secure, right? But, compounding is an important thing. If we look at compounding, if you take a compounding calculator, it's enormous. Now, I said I was going to show you how to get better returns. So we've already looked at this, but what about taking out fees? Look, I'm going to show you something. If you put the Wall Street knows that $1,000, not even added to over, age 20 to 65, a lifetime, 65 years investing, and the market's going to give them 8%. Let's just put in a little variance for fun. They know what that's going to equal. 2.5. They know what that's going to equal. It's going to equal 148 grand. Wall Street knows this, so that's why they want your money. You see, I'll show you a little trick. I don't have much time for it, but I promised you that I would do what? I'd show you how to what? How to explode your compounding. Well, if you pay 1%, 2%, 3% in fees, even 1%, Buffett said it, even at 1%, Buffett said it. He says, look, it's enormous. If the market's going to return 7 or 8%, you're paying 1% in fees or more. That is a huge, enormous difference, even at 1, let alone 2 or 3, in how much money you're going to have. So if we look at a compounding calculator, let's get rid of that. Now watch. What I did with this is I drew the same graph. See the same one? 1, 2, 3, 1, 2, 3. It's the same graph, same amounts. Value at 10.5, value at 8, and value at 5.5. Same thing, right? 10.5, 8, and 5.5. Now show the table. I'm going to show you a little trick here. If you look at a future value of 8%, now if we write covered calls, maybe we're over here, right? We get the dividend at 8 or whatever. I mean, my ExxonMobil I bought in mid 40s probably, pays 4% a year. I'm getting 10% just there of cash flow. Don't even need the stock to move. But if I add covered calls, this gets bigger. But let's just say the market's at 8. You put in $1,000 and you get 80. Well, what if they take out a fee of 2.5? How much would you have? So what happens is over time is without fees, you'd have 148, but with fees, you only have 32. That's where Buffett is right. It's an enormous difference. So check this out. I mean, this is worth learning about. I wrote a book called, 401 Chaos, been in some documentaries. I'm going to play this for you. I'm just going to play this for you and see if you catch this. Just listen up. Maybe I have to hit this to do it. I don't know. I got to figure this out. Here we go. We'll go full screen. Full screen. Here we go. If there is a gross universal cash heist, the 401k would be a prime example of that type of a heist. One of the people I read a lot is the late John Bogle, and the words he uses are robbery and tyranny. He didn't say people were bamboozled or hoodwinked or lied to or tricked. He says this is robbery.
Well, the great 401k experiment, it's safe to say, has been a dismal failure. They were not intended to be a comprehensive retirement plan at all. 401ks were originally created to be sort of bonus plans or profit-sharing plans for generally senior executives or senior employees of companies. And workers were told that 401ks would provide the same level of retirement security as a pension. That's what they were told since the 1970s. It's simply not true. The success of an individual's 401k depends upon their income, how much they contribute to the 401k, the investment decisions they make, the costs. It is a very difficult process to master, and very few do.
Now retirement goes from being a function of income that's someone else's problem to provide for you. That's your problem. It has not worked, and when it doesn't work, Wall Street will look at you and say, well, why didn't you save more? Why didn't you give us more of your money?
Most workers have saved very little in their 401k plans. Your average 65-year-old has, by my estimate, maybe $75,000 in retirement savings. With $75,000, you're looking at earnings to supplement your retirement at only a few $100s a month. So the question is, who can retire on, let's say, $500 a month?
Once you're retired, the company says, not our problem anymore. So now I have this nest egg that is really an hourglass, and the fear people have is that they'll outlive their money. Isn't that sad? That most people their biggest fear in retirement is that they'll live too long. So a little anger alert here. I mentioned that John Bogle, who wrote the book Battles for the Soul of Capital. He's the founder of Vanguard. He founded the company, the late John Bogle. Tyranny, robbery, and he says he robbed investors. Tyranny. Just look at this math that we already did. Look, how much of the growth goes to fees? What is your compounding? I said the whole key is compounding, right? That's what I said. For the whole time, it's compounding. Fees kill it. Fees steal the compounding potential because you reduce your growth. Look, it's awesome. Let me give you a long-term example. The example I use in my book is a guy who's 20. He's starting to accumulate for retirement. He got 45 years to go for retirement, 2065. Then the actuarial tables say 20 years to go before he dies, right? Death mercifully brings his life to a close. So 65 years total investing. We took $1,000 at 8%. $1,000 grew in the 65 years to just over 140. Now, the financial system, mutual funds in this case, take about 2.5 percentage points out of the return. And Buffett said 1% is enormous. But if you take 2.5, dead. So you have a gross return of 8%, but the net is 5.5. The $1,000 grew to what? Grew to 30 grand. $110,000 is kept by those guys. That's the compounding of the fees. They take the fees and compound them. $30,000 the investor. That means they put up, Wall Street, 0% of the capital they put in, investor all of it. 0% of the risk, investor all of it. 8% of the room, Wall Street gets it. It's crazy. It's absolutely nuts. Go out of theater mode here. It's absolutely crazy. That of the 100, so if you did not pay those fees, you get the whole 148 without even being smart. Okay, so that would accelerate your compounding, drastically accelerate it, as we promised. But if you take the fees out, you only get 32 and they get the rest of what was compounded. A lot of people don't understand that math. Why? They have no financial education. Here's what's crazy. They're so big, they can't do it. If you look at the Spiver report, which takes the S&P, all of the actively managed funds, 90% of them suck worse than what a person could have done themselves. 90% of them suck worse. Let's just summarize this. Here's what's nutty, and it makes no sense. The only industry like this, 90% of large cap funds fail to be what people could do alone. Wall Street takes most of the money, and Wall Street puts up zero risk, and we're doing that and calling ourselves smart. Why are we so dumb to do that? I'll tell you why. It's really, really simple. It's because we were educated over here instead of educated over here. What's the value of this time we've had together? I hope you find it valuable, but that's up for you to decide. But I tell you, the question is, can you learn this? Well, this is the ultimate irony that we would give people these monies. It is the ultimate irony that we would put up with this type of system, and it is ironic. So Warren Buffett, this is a mic drop here, man. The ultimate irony of the investment business, no question, an obstetrician delivers babies better than the husband or wife will. Dentists, they'll remove teeth or fill teeth better than the patients try to do it themselves. But in this world of mine, and in this world of you as an investor, in this world of investing, in the investment world, somebody who believes in American business, haven't I talked about that? Believe in Costco, believe in IBM, believe in Coca-Cola, believe in Apple, believe in, all these companies. Believe in them because they'll grow, and we'll seek out the lowest way to participate. Stock ownership. Just participate in this business. Be consistent. Don't worry about price today. We'll achieve results that exceed those of investment professionals, the group. Obviously, they will. Obviously, they will. It's the only industry I can think of where the professional's efforts subtract value of what the layman can do himself. That's a mic drop. Bang. Good job, Warren Buffett. I'm going to talk to you about cash flow and how stupid a 6-year-old can see that the 401k participant is paying fees, as we just saw. But Wall Street, look at this. Warren Buffett was collecting premiums from Wall Street. When a worker is enrolled in a 401k, they essentially promise what? They enter a contract to buy stuff, right? Well, isn't that what he did? He entered a contract to buy the $75. The difference is this. Mutual funds buy whatever the market is, and they charge you fees to do it, even if it's expensive. We get to set our own price, and the cash flow pattern is completely reversed. I mean, imagine instead of having the headwind of 1%, you put on a tailwind of 1% for a total of 2%. That's a headwind. I don't know if you understand this. We're running out of time. I got to go fast, but the bottom line is, do you want a paycheck or a plan? Choose now. Enter it in. What do you want? Do you want a paycheck? You want a plan? Tell me. Because your time is limited. This is in my office. I had this artwork built. This is 6 feet wide and 3 feet high in my office. And every Monday I go in and I fill in a circle. Every Monday I go in and I fill in a circle. Why? Because that's 90 years of life in weeks. That's 90 years of life in weeks, right? 10, 20, 30, 40, 50, 60, 70, 80, 90. I plan on living to 90, maybe a little longer. But every Monday I fill one in, and it is astounding the amount of life that is represented a week, because you can see it, and you can see it melt away over a year, and then another year is gone. So I don't know if you have time to screw around, but most people don't, because in America Saves 2024, Vanguard, once again, these fee people, how can we have a market raging as high as it is, and people about ready to retire have less than 90 grand? And they're going to say, well, you can pull 4% out as a year, is what they say. So 4% of that out of a year is $3,500. That's $300 a month. You don't even retire in dignity. I said we do 3 things. I said I had a legitimate opportunity to learn how to double the cash flow over typical investors. Did we achieve that here? Did we take what they could have gotten right here, and did we double it? And when you add it together, it's huge, right? Going from 30 to 100, right? Going from $13 to 43 when you combine these. So I'm telling you, it's not that tough to do. That's not a bold claim. Do we talk about how to compounding it materially? Well, quit paying fees, participate in business, get out of the irony, do what Buffett says, write some of these calls. Yeah, you can accelerate this. And how do you do it? You click a mouse and get paid. Okay. The last thing I said I'd do quickly is I'm going to go through it. We're going to build you a blueprint. I said there were 6 numbers that could change your life. I'm not going to have a ton of time to do this, right? I'm not going to have a ton of time to do it, but I have a calculator for you. We'll do this exercise, and you're just going to tell me how quick you want out of the rat race or when you want to hit a goal. We'll put in some inflation number, and then we'll decide what you want, whatever your dream is. Maybe you want to spend more or less than 10 grand on food and clothing and shelter. I don't have time to do these individually. Maybe you want to, have entertainment's bigger. Maybe you want to travel to Paris, put 100 grand in here. But I do know this, that once you price out your dream and you know what your life needs to look like, now it's not a 401k. I know what you need a year. I now know what you need. I wouldn't plan on Social Security. I wouldn't plan on a pension if you don't have one. So now you have to say, if I want to be out of the rat race, I got to have income from assets, not a job. And I need 146. Let's go 150 to make it easy, right? Whatever number you want to put in here. And if you want to be conservative and get 5% income on your assets, well, you'll need $3 million to do that. And if a person only has 87,000 in their 401k, they got 42% growth. See that? So this is how you build a plan, and you can adjust these numbers. So we're going to have to grow. Well, if my sons can pull 12, that cuts more than half what they have to do, right? And so you learn how to do this stuff, and maybe you add a little time. I don't know. I wouldn't, but things get easier as you mess around. I wouldn't add time. I'd add rate. I'd try to get more rate. But that's up to you. So how many would like to learn? I said there were 6 numbers I'd show you change your life. I'll get you access to that if you want to be one of my students, if I pick you. So that it's got to be, you got to be with me. You got to want to be with me. I also have to want to be with you. So how soon do you want out? What kind of lifestyle do you want? What kind of assets? We'll do it together. Wouldn't it have been nice to learn this in school? Wouldn't it have been nice to be in the school and be able to learn these 4 pillars that I've taught you? I haven't taught you the 4th one yet, but we had fundamentals. We looked at charts. We're doing some good work here. I know I'm pressed for time. I got to run. I got to go. One of the things we're going to teach you is how to make money by a range. In other words, I don't need to know the direction. I can sell options outside of the probable range, and now the stock can go up or down within a range. I'm going to show you how to do that. That's easier. ExxonMobil, yeah, we made a ton of money. Look, people either want to be in a school or not. If you would have had the chance in high school to learn these back in high school, how many would have run to get into a class that taught this in high school? How many wouldn't have walked you to run? Well, it's called the 4 pillars of investing. And I've started to highlight some of today, with you. I can spend 20 hours with you. And I can give you online access to my classes. It's the perfect training. It takes about 20 hours for us to do this. Lifetime membership, you can take this 20 hours as many times as you want. It's pre-recorded. Everything is there. But people don't have time to screw around. Our job is to make it fun, simple, and real, but also valuable, fair, and affordable, right? That's our job. And so, the criteria that I look for is, do you have a sound temperament? If not, then we can't do business. I just don't deal with crazy people. Do you like this process as much as result? In other words, if you want big arms, do you enjoy lifting weights? Because if you don't, you won't get big arms. So I care about passionate process. Honest and sincerity, that goes without saying. That eliminates a lot of people, unfortunately. And do you value education where you think it's worth investing your time in learning with me, your energy in learning with me, and investing your money in learning with me? Yeah, we're not a nonprofit. And I will tell you, if a guy says, well, I don't want that, well, don't get me going on my, pull your own weight and fair exchange. And, if things are affordable, that is a good word. Like if someone wants something for nothing, forget about it. But if you like the idea of investing time, energy, and an affordable, fair tuition, we can do this with the 4 pillars of investing. Now, I have some other things for you. On Monday, Noah Davidson, my chief instructor for Mentor Club, we're going to do a portfolio. And I mentioned earlier that one of the requirements is that you do this paper trade account. Well, We have a simulated paper trade account, and every time it hits $1 million, we start over. And we do it every week, okay? So what you're going to do is this. You can, well, we'll see. 4 Pillars teaches you the techniques we use, 20 hours to get that. Then what we do each week is we actually do them, okay, with Mentor Club. So every Monday we take these 4 pillars we learn and we do the trades. We do the portfolio, okay? So that's the 1-2 punch. You learn it and then you do it. Learn it with us, do it with us, learn it with us, do us. 20 hours of training, class per week here where you watch us do it, online access, when your membership. Now people say, when do I have to show up? You don't, we record everything. So this is all done and we do these every week. So everything's recorded. You do it on your own time. Now, last thing I might have time for, and if I'm over, I apologize. This is called the unfair advantage, and you should create one for yourself. The unfair advantage is a big deal. Robert wrote this book a long time ago, and he was kind enough. And I highlight the risk management. And he said, Andy, in this book, I want you to explain, Andy Tanner, what the difference between an amateur and a pro is. Now, look in a nutshell, it's simple. Amateurs are trying to make their money in paper assets from capital gain. They're looking for price movement. I want the price to go up. I'm scared if it goes down, someone says. And they diversify in a 401k for risk. We saw how that's worked out. It's the ultimate irony. It's crazy. Professional investors, we earn our money with cash flow strategies. I showed you one today, 1 or 2. And we manage the risk by those contracts. Remember the guarantee to sell at high prices. And you can do this like when he got his Yahoo stock. You know, Mark Cuban sold a company, had $1 billion in Yahoo stock, 1.4 billion. And the stock was up here when he bought it, right? It was up here. And he said, look, I want a guarantee that I can sell it here, just in case, at 85. I want to guarantee I can sell it. You won't understand what he said here if you're new, but what you can get at the end is that he bought an insurance, and we know that as the fire burns, we're glad we have insurance. The farther down this goes, the more it's worth to be able to sell at 85. If this thing gets down to $10 and you have a contract to sell at 85, that's where the put option value goes to the roof.
I already knew approximately, based off of where the Yahoo stock was, how I'd be able to, and what the volatility levels were, how I was going to be able to sell calls on my Yahoo stock and use that money to buy puts on the Yahoo stock. And when the stock collapsed, my puts were worth a fortune.
So that's how you protect. Now, that's an unfair advantage, knowing how to do this with risk management. But the reason I bring this up is to tell you the story about Robert. When he wrote this book, he called 6 of his top advisors to Phoenix. So I fly down to Phoenix, and there's 6 of us sitting around a table. Robert says, I'm going to write this book because I've realized it's unfair. I have this financial education. I know stuff people don't know. It's not even fair. And he goes, what is your unfair advantage? He asked each of us to think about what our unfair advantage was and then tell him. And I didn't write down what people thought, because some people thought, well, it's a talent that I have or some creativity I have. No, it's the people that I know. And I wrote down Corey Halliday. Now, this is the old Chicago Board of Options Exchange back in the open option case in Chicago. This is Corey Halliday. Series 4 option principal. He's our lead instructor for coaching. Right? He's a coach for us, and he does all the risk management training. Well, the reason I bring this up is I have a gift for, if you like, starting in March, right? Starting in March, so a couple weeks away here. Starting in March, we do our annual event. Now, this is an expensive event. It's thousands of dollars to go. I'm gonna see if you like this idea, okay? We have something we do every year called our Quick Start Labs, where Corey and I show off and we do our advanced training. So nothing I showed you here, this is secret stuff. This is the best stuff. This is the elite stuff that's hard to learn, hard to do, but once you get it, it's amazing, where we really compound. Now, in the month of March, we're going to do 8 sessions over that 4 weeks of March. So 2 a week, okay, 1 or 2 a week, some weeks 3. You can attend this one live, or you can watch it on your own time. These are our top cash flow strategies, stuff I hide, only for my best high-end students. We're going to do the trades from start to finish, and I've done this for 10 years now. This will be the 11th year. So what I'm doing is anyone that wants to be a student, if I pick you, okay, then I'm going to allow you into this no charge. And this is thousands of dollars. Now I call this a 30-day effort. See, the challenge I put in front of you is how good of a student can you be? If I gave you my time over the next 30 days, how much of it would you use? And there's two types of people. Oh, what does this take? You know, I don't have time for that. Either one or you don't. I'll make this affordable. I'll make it simple. I'll make it fair. Let's start with fair. This is called the 30-day cash flow blueprint. Now, remember, you have lifetime access here, right? Not 30 days, lifetime access. You have a year of Mentor Club we're going to do. You do have lifetime access to the recordings over the last 10 years. Why 30 days? Because you can put your head down and you can do this risk-free for 30 days. It's a risk-free challenge for 30 days to absorb as much of this as you can in 30 days. You don't have to be secure. You don't have to be confident, because I am. You haven't been through the training. I have. I taught it. So I know what's there. You don't. I am 100% certain that the 30-day cash flow blueprint has the power to transform your life. If after reviewing the course, you don't think the 30-day cash flow blueprint is worth every penny you paid, just let me know in 30 days, and I'll take your purchase, give a full refund for the blueprint. So zero risk, all upside. The qualifications, once again, are sound temperament, passion, honesty, time, energy, money. Do you have what it takes to be a serious student? If so, I'll build you an opportunity. How many of you'd like me to pick you to be a student of the Cash Flow Academy and give you a shot at the 30-day cash flow risk-free blueprint? Okay, if so, write this down. Okay, 30-day cash flow blueprint. I'm giving you the 4 pillars of investing trading course in this package. Okay, so I'm giving you the 4 pillars of investing, my very best training. Now on our website, that's $19.97. So I'm giving you $2,000 in training right there. Mentor Club, $1,764. I mentioned them. And the Quick Start Labs, as I said, is thousands of dollars. So in this pack, you're receiving thousands and thousands of dollars in the very best financial education out there. The boot camp is where I set you up with that simulation, right? We've got out of that simulation. That was our agreement. That's the boot camp. Learn how to set the simulation no matter where in the world you trade from. I'm going to give you downloadable. You're getting the audios from the 4 pillars. You can listen to while you exercise, transcripts. Everything is there that you need. Now, the total value of the training I'm giving you today is $7,697. Okay. None of you are going to have to pay $7,697. Those that I allow into the program are going to receive $7,697 in training, but they don't have to pay it. Now, I'm going to just nip something here. I said it wasn't going to be, but let's say it was. Do you see value there? That's the question. See, it's kind of like what I've said. Price doesn't even mean anything. It's like, what's the rate of return you get? Right? And how can you afford things? From the Rich Dad Poor Dad, I love this because I had 2 influential fathers. I learned from both of them. I had to think about each dad's advice, and in doing so, I gained valuable insight into the power of the effect of one's thoughts on life. What are you thinking right now? What effect will the thoughts you're having right now have on your life? For example, this is great training. I'm a good teacher. I know how to simplify this. I do it. I'm not a talker. I do this stuff every month. So what are you saying? If you're in a habit and you say, well, I can't afford this, how will that affect your life if you say that? You won't get it. I won't give it to you. The other dad forbade those words to be used. Rich dad would never let you say any price didn't mean anything. He insisted I ask, how can I afford this? One statement, the other's a question. One lets you off the hook, and the other forces you to think about it. My soon-to-be rich dad would explain that by automatically saying the words, I can't afford it, your brain stops working. And by asking the question, how can I afford it, your brain starts working. Put to work. He said, he did not mean that you should buy everything you want. He was fanatical about exercising your mind, the most powerful computer in the world. He'd say, my brain gets stronger every day because I exercise it. The stronger it gets, the more money I can make. He believed in that an automatically saying I can't afford it was a sign of mental laziness. I agree. Although both my dads worked hard, I noticed that one dad had a habit of putting his brain to sleep when it came to finance. The other had a habit of exercising it. So I'm going to help you with this. The long-term result, one grew strong, one grew weaker. I'm going to help you get a special deal on your training. Would you like that? Would you like that? Well, today I'm giving this away $19.97. You receive $7,697 in training, and you can do this for $19.97. Now, here's more good news. There's 4 ways to do it. I'm going to show you 4 ways to do it. I liked what one student said. They said, Andy, this is a vehicle for my brain. You know, my car was 50 grand. I spend $800 on it a month, and it takes me to the rat race. This is a vehicle that's not even close to 50 grand. It's $2 grand, but this could maybe take me out of the rat race. So what if I had a car payment for my mental vehicle? Well, if you want to do 3 payments of $600, no problem. And if you want to do payments of 3, no problem. And if you want to do it for $166, which is basically what it takes to take me out to dinner in exchange for teaching all this, you can do that. Now, if someone comes to me and they say, I can't afford $166, I'm going to say, well, good luck to you, because this is a business meeting and investors aren't poor. Well, if you don't have $166 for training, what are we going to buy stock with, right? It's an investment class, not the Red Cross here. So I'm going to give you a website now. It's called thecashflowacademy.com. I'll put it up here on the screen as well, up at the top. And this is where you can go and put /MM for Millionaire Masterclass, right? MM. So it's thecashflowacademy.com/MM. You can go there now and you can learn about how you can register for this and how you can get the deal. I'll go there here, and for $166 you're in. Click this button that says I want this now, and it'll take you to the order form. And you can choose which one you want to do, as I promised. Remember, it's 100% risk-free. You can get started today, no risk. Put in your name. You've done this, name, email, standard stuff. Put in your payment, and then choose which one you want. Hit the button, and you're in. Well, I'm out of time. It's been my pleasure to share with you clearly why a cash flow-based wealth plan, cash flow stocks are far superior to anything you could do. My name's Andy Tanner. Go to thecashflowacademy.com/MM. Fill out the form. Enter your payment information. Click which one you want to do, which plan, and click this button, and I'll see you guys on the inside.